From the Lineweaver Wealth Watch Center, this is the Financial Quarterback.
I'm Jim Lineweaver, your financial quarterback since 1993. Today we're going to talk about how the market has performed over the course of the year and what we see ahead for the finish of 2024. So here to help me is Chad Roope, a chartered financial analyst and also the head of the Lineweaver Wealth Advisor Investment Committee. Chad, where do we get started?
Thanks, Jim. It's been a great couple years for stocks, and we do remain optimistic. The economy is still solid, and the Federal Reserve will likely continue to ease financial conditions in the coming months. But we do expect some volatility this fall. Our analysis of earnings surprises and estimate revisions has detected some cooling trends, suggesting potential moderation of the earnings-fueled advantages that was a catalyst for much of the rally so far this year. Our research also reveals the autumn period from mid-September through early November in presidential election years has tended to be more volatile than usual, with increased vulnerability to downside moves. The elevated uncertainty surrounding the upcoming election adds additional volatility and complexity as well.
Yeah, given the sharp divide in the party's expected policies and the expectations of a close race, many are adopting a wait-and-see approach to major capital allocations and business activity until after the election. So in this state of uncertainty, any lack of market liquidity has the potential to trigger volatility, which could be compounded by the chance of delays or prolonged uncertainty about the outcome of the elections.
Also, recent changes in market temperament have caught our attention and gives us some slight pause. Relatively tranquil gains in large cap stocks for the first 6 months of the year have been disrupted recently with larger single-day sell-offs, rotations, and V-shaped snapbacks, which may be signs of a market more susceptible to headline-induced downdrafts. Given these factors, we decided to move to a slightly more cautious outlook.
And that's why at the beginning of September, we took some profits from our stocks and our clients' portfolios and used the proceeds to add to bonds. We've been overweight U.S. large cap stocks compared to our neutral position since last fall by about 2 to 3%. This positioning has benefited our clients' accounts as stocks have had a great year coming into September. However, as we enter the fall, we think it's prudent to be slightly more cautious and move closer to our neutral positions.
That's right. And despite this reallocation, again, to stress, we still think the earnings and the economy are still in good shape overall, and any potential stock market volatility will likely be an opportunity.
We're maintaining our positive outlook overall, and many of our long favorite tilts all are staying the same, although with a modest reduction in conviction. By tempering our exposure now, we're not just playing defense, but setting the stage to potentially capitalize on the opportunities that frequently emerge in the wake of uncertainty. So if you'd like us to bring the same analysis to your portfolio as we enter what is often seasonally volatile times, coupled with the uncertainty of the election, we're always here to help. So call us today to schedule time to talk with one of our advisors or join us at lineweaver.net. Here's Fox News Sunday.